Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Cardano, reviewing the price action of ADA, what's been going on most recently, what we think is likely to happen next and all that wonderful stuff. Now as I get into today's video, if you find it useful and informative, smash that like button, I really do appreciate that. If you are new to the channel then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. Let's go ahead and jump right down into today's video and review what's been going on here with Cardano's ADA. Kicking things off with the 1 hour time frame. Now we were looking for a move to the downside. We were targeting out 28.33 to 28.55. We lost this completely. It went massively further down, more so than expected. And this does change our structure because we're looking at this as a potential fifth wave movement. We can look at it, of course, as an extension, but I think it's probably better to actually start thinking of this maybe as a double and triple zigzag pattern in itself. So we're going to tidy this out a little bit. Okay, and we're going to reflect on what is going on here because we have broken down very, very significantly. Okay, so we can start this move up here. We can see we've had this wave 4 and then another extension to the downside. This kind of makes this look like an extension because we do not see any more detail within our wick down here. So what we're going to do is we're going to take it to a 15-minute time frame here, and we can still see it's a straight drop. So take it into a 5-minute time frame, you can still see it's straight down and then bounce. This basically is going to tell us that this is more and more likely to be an extension into this final move to the downside here. So this is likely to be 5 waves in itself, with this being an extended 5 waves within the fifth wave movement. So let's go ahead and review what that looks like, right? So we have a wave 1, 2, 3, up here is 4, extension down into 5, right? This is then a double zigzag pattern as we have 5 here and 5 here, but we need to obviously make sure that we stay within the thresholds of what is acceptable for that particular pattern, which would be we have to stay above the 1.618, and at the moment we are, but we have entered the territory, however, of the kind of world of double and triple zigzags because we've gone down deeper than the 1.382. So from a Fibonacci kind of sequencing level and the retracement levels, we can acknowledge that things are not looking great here for Cardano's ADA. So let's go ahead and first of all see what's going on internally here. We can see a slippage to the downside, bounce up, and then a move to down again. What we want to do is take this back into a 15-minute. We need to reflect on what is occurring within these patterns. For the most part, this is actually looking very much like a diagonal across the board. Essentially, an interesting pattern to kind of be experiencing within that fifth wave movement. Obviously, it has come down deeper than you'd expect it to. We are actually, to be fair, we are within its range of that fifth wave. So we would be looking normally 1.236 to 1.618. That basically essentially being right inside this yellow box at 26.95 to 27.3. So if we remove that, we can kind of see that we did come down into that range. Bringing it back up into our hourly time frame, though, it's looking like it is potentially still got a little bit further to the downside to go. Not thinking that this is done just yet. At the moment, my expectations are that we test the low side around possibly the 26.8863. Okay, so we are still looking for further downside. We look at this as a 5-wave movement. 2, 3, 4, and 5, containing as a diagonal, which will basically be 3, 3, 3, 3, 3, and that there would actually then finish off this structure. So that would basically essentially put us, I think, we'll just do some sense checks on it, very, very close to that 1.618. Very close. In fact, if we hit that low side, we are going to hit 1.618, which does make this an impulsive movement. So we'll be keeping a close eye on that. Let me just get this wick high here. And the high for this is 29,354. So 29,354. So let's go ahead and bring that in here. So what I want to do here is I basically want to bring our fib tool down to marry up with our wick high. And that was at 355 right here and ending in 4. So that there is the exact wick high, and therefore we have our exact 1.618 target range down here at the 26.9573. Okay, if it drops down lower than that, we're impulsive and we're going to see significantly lower prices here for ADA, which isn't too uncommon because if we take this up into our daily time frame, you can see that we were looking for a bounce up and then a more slippage to the downside. Now, essentially, that would mean that we actually have much further on the A wave before we can enjoy the B and then deeper down into the C. What this essentially does mean is we are looking at coming down quite significantly where we probably will be retesting the previous area of support, which on our daily time frame is seen approximately here. I think this is actually pretty reasonable within our range here. This one being 25.25 to 26.09. This is probably where we're going to end that A wave if we hit that impulsive trigger point. Then we'll bounce up and then slip right the way back down to the existing bear market low around 22 cents, with the idea of potentially slipping down even deeper, which does line up with our weekly time frame. Our weekly time frame, of course, is targeting out 15 to 18 cents. This is an area of previous resistance that we could turn into support, but also an area that falls within our Z wave pattern as well. So we can see that there's a potential structure and a potential pattern here that leads us down into the lows. But as I said many times before, and I will say it again, this is not necessarily a bad thing. This is actually pretty reasonable. It's a pretty healthy correction, and it actually is a great dollar cost averaging opportunity, as I cover many times over, and I'll probably do a few videos in the future in the next few days talking about the potential that ADA has for massive upside movements. I think just a few days ago we did a video talking about how ADA could be targeting out that kind of $26 to $90 range, as you can kind of see up here on the C wave, right? Which is very, very significant. Obviously, to kind of push up there, we need to see, good reasons and rationales, which we see lots of DApps being built, lots of total value locked, and all those wonderful things. But from a price action point of view, 15 to 18 cents is also a good area for support. And I think this is likely to be where the bear market low is. This does bring us, of course, into the data range or data part of the video, which if you head over to cheekycrypto.io, linked in the description below, you'll find our membership website at membership.cheekycrypto.io. 7-day free trials are available across all the various different plans that we have, and a part of those plans there's different perks and things like that. We're going to be talking about the data perk, which is for Cardano's on-chain data. And if we go ahead and load up the on-chain data, there's 3 tabs. We have the overview, the liquidations, and the wallet-based data. Starting with the overview, we can see that there is an all-time high of $3.10 USD. We're 713 days since the all-time high. We're 91.18% down from the all-time high, which isn't too bad. The average transaction value on Cardano in the last 24 hours is $38,943, and it costs just 0.3386 of an ADA to complete that transaction. Let's put that into context. There were 52,000 transactions at an average price of $38,900, and it only costs $5,000 to transact all of that. That is incredibly cheap and very efficient at what it's doing. Now, we can see there's 36,000 active addresses in the last 24 hours out of the 4.4 million addresses that exist, $10 billion market cap, 35 billion in circulating supply. So good stats all round. It's good to see that we've come down. Anything below 30 cents, in my opinion, is a good dollar cost averaging area. We're completely undervalued, in my opinion. Liquidations in the last 24 hours, some strange things have occurred. As we can see, $2.2 million of liquidations, and CoinEx, of all exchanges, seems to have cropped up to the top. Now, that's the exchange with the biggest amount of liquidations for Cardano. $558,000 liquidations on CoinEx, a bit unusual. 97.71% of positions were long positions that were wiped out. That's obvious because we saw this significant surge to the downside that is over and above and beyond what was expected. So I can kind of see why some long positions were wiped out during that move. 2.29 were short positions, which was a bit odd, but I guess that's people trying to catch it at the wrong moment. CoinEx, as I said, is the odd exchange here when it comes to liquidations. We do not see CoinEx normally anywhere near the top. So when it's at the top here, we have to consider why. What is going on at CoinEx that's creating such liquidation events? Is there a crazy wick that just kind of stopped everyone out? Is this a data issue, or actually is CoinEx liquidating people because they need to capitalize in on fees and things like that? Yeah, speculation. This is unusual. We'd have to investigate CoinEx in a lot more detail because this isn't what you'd want to see. Now, OKX is in second spot at $530,000, which is pretty sizable in itself. It's above Binance at 495. Huobi, again, the other exchange that's got rumors about insolvency, 340. Bybit's actually all the way down there, which is very unusual, at $272,000. So if we start thinking about all the exchanges that actually are pretty heavy on the leverage positions, you'd expect Bybit to actually be slightly higher in the price charts than you would see it right now. It's a little bit unusual. unusual. It's very unusual to see CoinEx up there. So 25% of all liquidations are CoinEx, 24% OKX, 22% Binance, 15% Huobi, and only 12% are Bybit. So very, very unusual. We'll have to keep a close eye on CoinEx. Moving over into wallet data, we have 10 different sized wallets, but we're really only going to focus on a handful of these. We can see pretty decent accumulation occurring, but let's start with the highest level. Over 1 million ADA per wallet. There are 2,827 wallets that have over a million. And we can see over the last 7 days, it's absolutely flat, no change. In the last 30 days, it's up 1.3%. And in the last 90 days, up 3.1%. In the last 180, up 2.43%, but down 1% over a course of a year. This is actually pretty obvious because we've only really started to see moves to the downside where some decent dollar cost averaging could be had. As I said, a new bear market low happened in June of 2023, and I suspect a new bear market low to occur soon. So it's good to see that accumulation is happening at that really wealthy level. That gives us some confidence that we're actually in the right place. 100,000 ADA or more, there's 24,577 wallets. And of course, we see accumulation across the board, across all the timeframes, lots of buying up. Specifically, the buying really started aggressively in November of 2022. So it's good to see good growth there. 10,000 ADA or more, up again 20% over the last 365 days. 181,339 wallets with over 10,000 ADA in them each. 1,000 ADA sits at 474,000 addresses with 28% up in the last 365 days. As you can kind of see, guys, we've got a good accumulation occurring here for Cardano's ADA as we talk about this over and over and over again. Ultimately, this is a good sign for things to come. My concerns at the moment are probably going to be all around the exchanges, where we see that CoinEx is unusually high in terms of those liquidations. OKX actually has good understanding as to why. They've spoken to us about why their data is high, but it is what it is, and they're not hiding anything. Binance is also quite high as well. Huobi, we know that there's potential rumors around insolvencies and things like that. So for me, BitGet is my go-to platform. BitGet is where I go to for 100% of my leverage and 90 to 95% of my spot positions. There is, of course, an affiliate link in the description below. If you have not yet signed up for BitGet, why not check that out? The affiliate link in the description below, it does enable you for up to $8,000 of rewards, depending on how much you deposit and trade on the platform. More details are, of course, found in that link. Just understand the risks involved in trading before you get too involved. In fact, probably do some demo and paper trading via BitGet as well. When you sign up, you can do some practicing with a dummy account rather than just going straight in and degen into 100x positions. Ultimately, though, I find BitGet very intuitive, very easy to use, but it's not my only platform. I also use many other exchanges such as Binance, Coinbase, KuCoin, Gate.io, Bybit, Crypto.com, for example. And the strategy is quite simple. Make sure that I'm registered with as many different cryptocurrency exchanges as possible, understand how to move money on, move money off, deposit crypto, withdraw crypto. Do I need to do KYC? Get very familiar with each platform so that when the time comes to kind of enjoy getting some gains out of the market, I can go to these platforms. If one is down, I have a backup to go to. So it's always great to have access to as many as possible. Make sure that you link bank accounts. Make sure you have good ways to withdraw, and you don't want to kind of get caught off guard in a bull market. So if you haven't yet signed up to some of these exchanges, check out the links in the description below. Join us in Discord. We have more information available there as well. Now, from the trading side of things, we've seen a few good trades over the last few days and weeks. It's been very slow in terms of us being able to kind of capitalize in the early part of this week. We've seen a few gains being made in places. Obviously, you know, for the most part, some of the most recent moves in the market were unpredictable. We did not see Cardano slipping down the way that it did. But for others, such as Bitcoin, that was very predictable. We could see that those moves were lining up quite nicely, and there's nothing terribly too unusual there. Same with XRP, nothing terribly too unusual with that one either. So for the most part, we've actually been able to kind of, you know, be very predictable with the trading elements and what we have to offer within our memberships as well. So I think, though, guys, I'm going to wrap this video up right there. Keep it nice and brief. If you have found this useful and informative, smash that like button. I do appreciate that. If you are new to the channel, subscribe. And if you haven't yet joined us in Discord, you're missing a trick. Check it out, linked in the description below. Until the next one, though, guys, have a fantastic day.